around Tuesday, Eagles. Who's ready to soar? How are you, Patrick, Tom, everybody? Everyone doing okay? Just want to tip my hat to Blake again on Euro Yen. It's 2 Euro Yen successful trades, one in the private chat, this one pattern in play from yesterday or Sunday night. Not sure where the entry was, already up 1%, threatening the Euro
Dale?
Yen now threatening. Oh, you can't hear me again?
Yes, good morning.
Good morning, Steve.
Now we can hear you. Thank you very much.
Oh, all right, buddy. So we're threatening the Euro Yen to have been a false breakout back under resistance. Steve's trade still working in Aussie. We're still looking good on the Bund trade from Blake, basic technicals. And for those of you that like to trade crypto, there was a brilliant short yesterday from Nick, Bitcoin. Closed at 14,585, good for 1,000. Very nice trade, day trade. Just that one trade alone could have paid for your yearly, annual, semi-annual subscription several times over. Okay, so a lot of nice trades in the green. Also want to put out that the hit rate's about 59%. And if you trade that way and you're looking at 3-to-1 profit risk ratios, just trading a 50% hit rate is going to be a real nice return a year. So everything above 50% is extra gravy. The sale is going to end next Monday, so I suggest you get on the ball and make an investment in yourself, not in us, in yourself, so that you're prepped. Everyone knows I'm a big believer in social trading, and we have that here to some degree with the questions being asked, not as much sharing of other people's technical views, but we do interact with the community here. What I like about ForexAnalytix is it's social trading by experts with different methodology. When you consider the fact that you have Elliott Wave covered all the different choices for how to skin a cat, harmonics, candlestick, macro, and conventional. So we have it all here at your fingertips. I don't think you can find a subscription service that has as many different analysts contributing in this way, especially with the technology that our company has invested in to make sure that you guys have this to be accessible and able to modify the page to suit you. You could use ForexAnalytix to suit your trading personality, as Jack Schwager says. So not only your style of trading, but your style of gathering intelligence that would be an input into your trading. So I have a few things I want to talk about. After listening to Grega yesterday, I'm still believing that this is not a bottom in the dollar. This still could be a bear market rally. We're approaching this old support zone. In fact, we tagged it. So for a turnaround Tuesday, my view would be to look to fade dollar strength today. I prefer to do it in euro pound, and this is why. You know, even though it looked ugly from here, if you guys recall from a few weeks ago, called this bottom, called it a falling wedge. We never achieved this objective up around 90. So this move was, let's call it 680, about 240 pips. So 240 pips from here, between here and 88, I'd look to accumulate. Being wrong, say at 740. To me, it looks like we could have something like this from here. So this to me looks like just a normal pullback. And next time over 89.20, we have a shot for above this wedge level. So I like euro pound in here. And looking at the oil, we're approaching the 62.80 targets. We've had one drive. confirmed high. Second drive, diverged, little pullback. Maybe we get this third drive up towards 62.80 to 63, and then I think you could be looking for a correction. Just eyeballing it back to 60, 59, 58.50, I think is possible. So, you know, a lot of this is because of tensions with Iran right now. And, you know, no one liked oil in the mid 40s. There were times I was even looking for lower numbers, but the 62 number, I'm not pulling it out of a hat. I'm pulling it out of a wedge that was created in 2015 before the collapse. And that count comes in right here at this high. This is 61.54. This is 62.56. We're almost there. So very overbought on the weekly. And I'd be looking for potential reversals to take this market back down. So those are a few of the things that I'm looking at. We have a very interesting guest today, very timely. And actually, I noticed I went to Sonny's TradingView page, and he was negative. Bitcoin up at the 17,500 level or so. He made a comment. He's going to go over Bitcoin. I believe his belief is it's toast. I think that's a word he used on Twitter. And he's going to give you the overview of Bitcoin. I'm going to ask him about other cryptocurrencies that he may be trading as well. So if you're, you know, a fan of the crypt, and I'm not talking about tombs and burial sites, I'm talking about cryptocurrency, stick around for the interview with Sonny at BTC. And with that being said, I'm going to turn it over to my partner in fighting crime on the internet, not a partner in crime. We fight crime on the internet by being transparent and authentic and admitting when we don't know, and admitting when we're wrong, and laying it out with the guys here that are traders with what they're doing in their own account when they're talking about what they believe, so they have skin in the game when they're making recommendations. So with that being said, the most disciplined trader I've met in 3 decades, Mr. C. Volge. Take it away, buddy.
Mr. Blake. Blake is going to go first, actually.
But you know, but that was a good intro for you, Steve. I'll tell you.
Yeah.
You know him. I've told him many times. He was born to be a poet or a writer.
Okay, so in light of the football season, at least in college, being over, I passed the baton to ForexAnalytix, own Tom Brady, Blake Moore.
Thanks. Did you see that? Man, that quarterback last night from Alabama, man,
Wow.
that Hawaiian kid. Wow, I mean, that was
Freshman never played a whole game and came
out
in
of nowhere.
Age, wow, unbelievable.
Out of nowhere. And anyway, for those of you, it was a great. I missed the end of the game because I was so tired. I got up this morning and I was like, wow, I watched a couple of the highlights for like 2 minutes and I'm like, that's great. Anyway, you know, I want to talk to you guys about, you know, a couple things that had happened overnight, and you can see the chart that's on my screen. This is a chart of iron ore. Iron extremely strong, and it's one of the things that have, you know, I'm sitting here trying to short, like, you know, the pound, or excuse me, the Kiwi and the Aussie, and having a difficult time. And one of the things that might be the reasoning why I'm having a difficult time trading to the short side is we got iron ore prices that continue to higher, and you can see we're closing on levels that we haven't seen since August. That's something to take of, especially if you're trading the Aussie and the Kiwi. And you know, today, you know, iron ore continues. Excuse me.
It's interesting you bring that up, Blake, because I've had debates with people. You know, I like to correlate gold with Aussie, but I've had so many people say iron ore is a much tighter correlation to it.
It is, and it can be. Sometimes it is, sometimes it isn't. But it is a correlation that you have to pay attention to, and it's something that it's obviously on my radar right now. I'd like to see iron ore prices take a little bit of a turn for the worse, because that I think would help the Aussie and the Kiwi reverse. So anyway, just a chart that I thought I'd bring to your attention, that we're in, at least this morning, breakout territory. We'll see how things pan out later today. Overnight there was some news about the BOJ adjusting their balance sheets, kind of tightening, and I was online with our office last night, and after it happened, and you could see this is the what had happened with the yen. The dollar yen dropped from 113.15 or whatever down to 112.50, bounced, and we're heading back towards the lows, which obviously helped my euro yen short. I mean, the euro yen's down 100 pips right now, and we're breaking back below the breakout point, which I'm super happy about. I've got a full size position in the euro yen. So it's making my day.
And that poke above that channel that you had there, I remember I let a show off saying, I can't fade the U.S. dollar yen strength anymore. And you came on and said, I don't agree, and you showed this trend line. So even up there, you weren't convinced. And I tell you, your track record with calling the yen for the past 4 months has been spot on.
Well, thank you. Unfortunately, I didn't get. I had a sell order in the dollar yen at 113.20. I want to say it was like 27 or something, and obviously I didn't get hit. So I was a little, I was trying to get a short off right here where this red trend line was, and we were just kind of creeping up, and everything was looking great. And I ran to the store to run an errand, and I came back, and 3 minutes after I pulled in the garage and I walked inside, the market had been moving, and I'm like, man, did my trade get off? And I didn't see anything come across my phone just tell me that my order was executed. So I was like, chances are I didn't get filled, and of course I missed it by about 10 pips. But like I said, I'm short the euro yen. I actually shorted some Kiwi yen overnight, Aussie yen overnight. So doing actually okay in those, especially the Aussie yen. The Kiwi yen's been very frustrating. So, but the thing is that news. The point I wanted to make here is everybody made a big riff about this big policy change in the BOJ, and the guys in the office were like, well, the shift has been. It's been a stealth shift in the BOJ policy for the last few months. This is something that they've been actively doing. So it shouldn't be too alarming, but it did get the attention of the market last night. And the one thing that I thought about this morning is, okay, when I got up this morning, which I woke up a little earlier than normal just because it's one of those situations where something happened last night. I got up almost in the middle of the night, towards, within about an hour of when I normally wake up. But I'm like, okay, I have to go check the market now. There's no way I'm going to get back to bed. I had to see if the futures have been, affected at all. And lo and behold, the stock market is once again up at its highs. And I was thinking that this yen move could have been a catalyst to drive equity market a little lower, and it hasn't, at least not at this point in time. So this market is still still unfazed. Now I think we should still monitor the equity markets and see how they respond today. This is the S&P, just an hourly. You can see a little ascending wedge that we have here. If the stock markets have a turnaround Tuesday, if you will, and we see some selling pressure come in today, that's the only thing that's going to keep me in my yen trades. The euro yen I might stay in just because I think the euro yen's a straight up reversal at this point. But being short the Oz yen overnight and I'm only up 30 pips, and being short the New Zealand yen and I'm only up 2 pips, I'm not going to hold those tomorrow if the stock market stays elevated. I'm just not going to do it. You know, I'm looking for some sort of catalyst to promote, or not promote, but provoke some profit taking in equities or in risk appetite, and we're just not seeing it. You know, volatility is still contained. I'd like to see volatility back above 10, to see a little bit of air come out of these equities, but we just haven't seen it yet. So with that being said, you know, I'm still a little nervous about being too aggressive here. And really, you know, not only did I talk to, you know, been online with my office this morning, I've been online with my some of my really good trader friends, that some of the best traders that I know, and that trade equities predominantly, and they're telling me the same thing. Hey, look, Blake, nothing's changed. You know, we're all looking for rotation, you know, and until we see some price really shift, you know, there's so much retail inflows into equities right now that it's just rotating from, you know, if it's they expect retail to be up strong today because of Target, you know, if it's not retail, it's energy, and if it's not energy, it's tech, and if it's not tech, it's, you know, consumer staples. It's, you know, it's always rotation, and until we see a broad market sell-off where you start to see every index, every sector come down, it's just rotation. So just try not to get too excited about any type of downside. And I'm telling you guys this not only to tell you it, but also to reinforce to myself not to get super excited either. If you see the S&P come down, you're like, oh, here comes the S&P. You better take a look at the NASDAQ. You better go look at the Dow. You better go look at transports. You better go look at energy, and see if you're seeing a broad market sell-off versus just, you know, one portion of the market, because that's really the key word here, is rotation. And I know I'm focusing on stocks, and you guys go, well, this is a, you know, you guys are, you know, you deal predominantly with currencies, but remember, right now, all eyes are on equities hitting all-time highs. And until we see the equity markets loosen up a little bit, when I say loosen up, meaning some two-way price action, where you see stocks start to come down, risk aversion start to pick up a little bit, it's going to be very challenging in the currency market, because the currency market is not going to loosen up if the stock market continues to grind higher. What you and I need, and I'm telling you as a, you know, as a trader attempting to make money in these markets, what you and I need is we need some higher volatility, because once we get higher volatility, we get more two-way price action, which is a lot easier for us as traders to make money in this market. Does everybody understand what I'm saying? And I'm asking you guys at home. Do you can respond yes, no, maybe so, just like a why or no, just, you know, does everybody get what I'm saying? And I understand, like I said, this is a currency. I trade only currencies, well, some precious metals too, but predominantly currencies. And this is what I'm looking at. I'm not telling you I'm looking at stocks because I'm trading the S&P right now. I'm telling you guys this is what I'm looking at, because this is what the market's looking at. And until we see something happen here, it's going to be very difficult in the currency market, especially without any economic data today. All right, so it looks like you guys are all
they get it, buddy.
They're getting it, yeah. And David says, thanks for all this advice, Blake. Awesome stuff. I'm glad you're taking it all in. And obviously there's comments from a lot of other people too. Okay, so now as far as currencies go, let me just review a couple of things. First of all, the euro dollar. The euro dollar, it's come under pressure. As I've explained to you guys for a while, I am expecting dollar weakness, but it's not going to be easy. And as I told you guys last week, you know, I wouldn't be surprised if the euro came down to 118, then back up to 122. It looks like that's what is trying to happen right now. If you like, I'm not going to be buying the euro dollar. today, more than likely. But I am looking at the euro because I'm trading the euro yen, and I'm thinking, well, the euro dollar might come back and retest this broken. You can see this broken trend line around 118.90 or so. I think this is very possible that we come back down and test this. You know, get down to 119, probe the stops below there. Why is this important to me? Because if we stop and we pivot off this 119 level, that might cue me in to do something with the euro yen. So that's why, and for those of you that are looking to trade the euro dollar to the long side, you know what I'd be looking at, frankly, is if I could get a move, and let me just grab the highlighter. Ah, crap, that's not what I wanted. It's this Bloomberg system, like, kind of screws me up a little bit. Hold on, let me move this out of the way. Okay. These you know, what pops up on top, I'm not really too sure what mechanism controls that. But anyway, this 618 that comes down here at 118.70, if we get like a little stop run in the euro dollar, and we drop, you know, another 70 pips from where we're at, if we get all the way to that 618, I might actually take a whack at being long the euro dollar somewhere down there, because this upward sloping trend line, whoops, that you see here, I didn't draw that very well because I'm doing it via my mouse, but somewhere in this neighborhood, I would be interested, you know, but I don't think we're going to make it all the way down there. I think we're probably going to do more like that. But that's what I'm keeping an eye on with the euro dollar. The pound still range bound, very, very much, you know, jumping around within this 135 to 136 level. The Aussie came out of an ascending wedge. Whoops. Let me grab this trend line. I don't know why I moved. Here's the Aussie dollar, came out of this ascending wedge. So, you know, the Aussie looks like it's going to continue lower, but I brought up that chart of iron ore. In order for the Aussie to really start to loosen up to the downside, I think you got to see equities come under pressure. Iron ore probably reverse a little bit. Kiwi's up against 72 cents, which is a big trend line resistance, very overbought here. You can look at the daily RSI. We're at levels that, I don't know, when's the last time we saw levels like this? Back in May of 2014 or March of 2014. Yeah, you know, so we're at, you know, you look at what happened March of 2014, and we got a little bit of a pullback there. We did continue higher, but those spikes usually coincide with our relative strength, extremely overbought. So I'd say if we don't reverse today, we're probably within, you know, a day or two of pulling back. Swissie's just contained, not really doing anything. Dollar Canadian, I really feel that the dollar Canadian is trading heavy, might have a flag pattern here. Like Steve has been saying the last couple of days, any type of bounce up to 126 is probably looked at as an opportunity to sell it. The US dollar Mexican peso, I've been buying a little bit down here, and the reason why is because if the market does see a little bit of risk aversion, I think we've been basing here in the US dollar Mexican peso the last few days, but we need to move above 1940. I've got more of a, what I call like in the Marine Corps, when you were, I was in the infantry, and we'd, you know, lay down fire. We'd lay down fire, and you'd have, like, you know, 5, 6, 7 rounds, and then a tracer round would go out. A tracer round is a round that you would see at night, so you kind of knew in the direction you were shooting, right? And so when I trade, I may be looking for a US dollar Mexican peso to go higher eventually, but I laid down some tracer fire, meaning that I bought a little bit just basically to be tracking it now. Not enough to affect me if it drops and it breaks down. It's just enough to basically, it's a little tracker trade, so I can keep an eye on it, and because this way it won't fall off my radar now that I've got a little position. You know, for me, it's only a quarter-size position. You know, if it works against me, then I get out and I barely take a loss. But if it starts working in my favor, then I know I need to start paying very close attention to it. So the US dollar Mexican peso, I'm looking for some sort of pivot off of here. And you know, with the cross rates, I'll leave a lot of these for Steve, but I am you know, short the euro yen, and this one I haven't added, but I'll tell you what, I got an email from JP Morgan, their tech team in Asia last night, and I'll show you the gist of it. Let me find the here. Give me 1 second. Let's see. That was sent last night. JP Morgan. And where is it? Last night. Yesterday. Oh. This is hold on. Oh wait, no, that wasn't it. But that is it. I mean, it was on it. But last night, here, let me find it. They sent me a chart, basically just a chart with the euro again, saying, "Hey, this is going to be problematic for longs," and it was basically just the chart. I'm trying to find it. Oh, here it is. And it was this. They must be watching this. Check this out. They must be watching. Where's my thing? There you go. This webinar, because they sent this out last night. This is last night. They must be watching the webinar or the weekly face webinar. This is, they're talking about the positioning in the euro and versus the yen, and that's the chart they sent out. So we've been discussing this for the last couple of days. So just a little, you know, heads up. Yeah, we're trying to get ahead of the curve here. But here's the euro yen. We're back below the breakout point. Okay. Now that we're below that breakout point, and you see this, you know, very divergent relative strength, we hit highs in RSI way back here in the summer, and we hit a new high. Obviously, we didn't over here, and now we're starting to reverse. So this euro yen looks pretty deadly. Wow, see, look at the S&P hitting new highs, and it's weak even as risk appetite is strong, and that to me says a lot. It says a lot. Anyway, so I'm going to stick with it for now, and it's probably a position I'm going to at least keep some sort of core position in for I'm going to try to for the next, you know, few weeks, maybe even longer than that. But with that being said, I'm going to pass it over to my colleague Steve. Steve, how you doing this morning?
Nice mentoring today, Blake.
Sorry, mate, I didn't realize I was muted. I'm good. How have you been?
Good. Hey, before I go, make sure that I wanted to mention this. Remember, we have a ForexAnalytix offer. You can get, you know, all of these patterns in play when they're released. New analysis like the Euro New Zealand that was just published about a half an hour ago. You can take advantage of all this with our New Year's offer. And because I don't know if you Dale, I don't know if you talked about it this morning, but yeah, buy 1 month, get 1 month free, 25% discount on semi-annual, 35% discount on annual plans, and it's only good until the 15th. So yeah, take advantage of that.
Actually, I said that Nick's brilliant short scalp on Bitcoin could have paid for it several times over.
Oh my God, she made 7% in like a couple hours. Yeah. I mean, of course, that's Bitcoin. It's hard to do that when I'm trading the here, but you know, that Bitcoin, was a 7.7% return. I mean, so
nice scalp.
Yeah, it's a great scalp, and so guys, take advantage of the New Year's offer because we probably won't have an offer for months after this. So you got to take advantage of it. Now, with that being said, Steve, how you doing?
I'm good, mate. I'm good. I'm actually, you know, quite happy. Yesterday I initiated, like just before the webinar, some positions, Aussie yen, Kiwi yen, just before that gold, Aussie USD, and you know, and SPX. And besides the SPX, everything else seems to be working for now. Obviously, it was a godsend gift to the yen move overnight. There's no question about it. I'm also monitoring the euro yen. I have no position there, but that was an excellent short from the 161.8.
Oh, did I hear the term godsend? So you believe in him when it comes to trade?
No. It's an expression, my friend, as you know.
Good trading.
You're busted.
You too, Blake. Nice euro yen.
Blake, you actually managed to top tick the euro yen, and that probably counts as much as all the rest, because
yeah, my average isn't quite as good because I have been adding on the way down, but it still looks great. So thank you.
And it was unusual yesterday. Greg, who's normally has a positive view of the yen, he showed it breaking back down to 110. So that was excellent by Greg yesterday. Shows that he's flexible. And because I know long term he's pretty bullish U.S. dollar yen, but that was a pretty deep break for Greg to be looking for in the yen, down to 110.
Absolutely.
Yeah.
All right, guys, I gotta roll. Good luck, and hey Stelios, good morning, and see you guys.
All right, Blake, take it away, Steve-O.
Okay. Yeah, obviously, as I said, we've been lucky. The vast majority of the positions we talked about yesterday seem to be working just fine. So no real reason to be looking for a change there. Now, having to do with what happens from here, I would like us to begin by having a look at the DXY, obviously. Okay, because the DXY is rebounding. So, that's good news in a sense in what we were looking for, and we were looking for a bounce higher. But now we're entering once again, a zone that can provide resistance. So we're entering the 90 to 60 area once again. So, I want to be a little bit cautious. I was obviously hoping that the rebound higher in the dollar would involve a little bit of more movement of the Aussie, for example, Kiwi, etc., and a little bit less of the euro. Not that I'm long euro, but I'm seeing the dollar rebounding, and I'm viewing this as a corrective rebound. And I would have hoped that the Aussie USD would have already been lower from here. So this position can be moving more towards the 77.40 area that I'm looking for. But on the other hand, having diversified to the Aussie yen and the Kiwi yen, and having the overnight move in the yen has helped quite a lot. So it has made for a decent trade already in these ones, and I like the fact that the Aussie yen seems to be breaking lower from this steep ascending channel. The Kiwi yen has moved less, and if you remember, Dale, we explicitly mentioned yesterday that the reason we believe more in the Aussie's downside than is the cross rate, the Aussie Kiwi. Right. On the other hand, I have to say that this is now that we're back on the daily, because yesterday we showed the wedge break lower on the 4-hour chart. You can even see it here if we draw it. It
looks like a descending triangle, head and shoulders top, approaching the neckline.
Yeah, it was.
It breaks down. It go all the way back down to that major trend line at the bottom of your chart. Looks like it measures that. If it breaks.
But first I would be paying attention to this trend line. It's one trend line that I'm monitoring. So we might get some support, like that's somewhere 20-25 pips lower from where we currently are.
What do you do? Steve? Excuse me. This is very important. What do you do when a candle goes in between your dotted lines?
What do you mean?
Well, you have dotted lines for that support level. So if, like in a few days, there'll be a blank space between the two dashes.
Oh my God!
What do you do with that in a situation like that?
I panic. I go crying to my mother.
I mean, there's no line there.
Yeah. Okay. Oh my God, Dale, you and your humor. So yeah, regardless, you know, I'm very skeptical, and I will be monitoring. I don't want these positions to turn against me. So now that they've moved, you know, in the money, I'm not gonna let them, because, you know, I'm fully aware that they're counter trend. I'm not gonna let them. I mean, I'm very patient when it is with trading with the trend, but when I'm looking for reversals, I'm giving a limited time period for the trade to move. Otherwise, I'd rather, you know, book some little profits and you know, get out of there, than hoping that if it starts turning higher, it might start turning lower once again. So at any given point, you know, I might cut those positions off, because, as I said, I don't want something that's a profit at the moment to become a loss. Having mentioned that, I remind you that I've already tried my luck with a reversal here in the gold, and I'm currently like $5.50 in the money, and I like where it's currently headed, because it's testing this ascending channels support, and I really want to see a move at least to 1300 from here. So this is a position that from how it's currently moving, I feel better about it than I do about the Aussie USD. So, for example, I might take some limited profits there, but I think that I'm going to be keeping my gold position for a while longer. Let's have a look at silver as well, because I know that people are also trading silver, and I usually trade it as well. And silver was also is also providing us with a very nice technical rejection from there. We were monitoring at this confluence, this descending trend line, and the horizontal resistance area confluence. It's actually providing a very nice rejection, but keep in mind that after such a strong move higher, there is always the possibility that we're going to find, let's say, the first area of support, which is somewhere there, and then push higher once again, right? So I just want to make sure that everybody's fully aware that, you know, you have to be treating your trades in a completely different manner when you're trying to catch reversals and when you're going with the trend. So you know, getting a good entry point is imperative, obviously, when you're trying to catch a reversal, but it's also imperative to realize that you know, it's a little correction and nothing more than that, if and when that happens. Okay, that's why we've also said many times that you know, being on the webinar every day, which is something we you know, wholeheartedly offer for free to everybody, is one thing, but on the other hand, you know, we keep updating people in the chat room and through push notifications to whatever we do intraday, and that's something you can only have if you're a ForexAnalytix member. Now, having to do with the euro and the cable, because I know obviously they're extremely popular, really, this is the third day in a row that the euro has been moving lower, but in all honesty, personally at least, and as Greg has said yesterday as well after me, nothing has changed for me. So am I bearish the euro USD? Do I believe that this is a double top? No, I actually don't. Why I don't? Because you know, my experience and statistics say that, you know, it's less likely for that to be the case than for it to be the case. Okay, so I do recognize that it's been moving lower, you know, with some kind of a momentum, let's call it. I'm not long, so I'm not trying to talk my book here or whatever. I'm completely neutral here. I have no position whatsoever, not in any cross as well. But I have to tell you that, for example, at the very minimum, I want to see a break below this horizontal area here, and it also confluences with this descending channel. So let me draw it here for you. Okay, let's take the highlighter. So at least this area, you know, I want to see it break to the downside before I can even discuss any other scenarios than the bullish one. So, you know, until that happens, yeah, go ahead, Dale.
I'm seeing from different people, Steve, macro, their big bull bear line in the sand is 117. So I'm just saying I've seen that number pop out. The number.
Oh, there's no question about it. I didn't say that below there I'm becoming bearish.
Right.
I said that below there, you know, I'm open to discuss other probabilities like more complex corrections, whatnot. You know what I mean?
Anyway, they're saying that's the pivot. If it's taken out, that's going to signify that this whole rally from 103 to 121 is over.
I actually, for me to be bearish, I have to be honest, I need to see a break below 114.50. So for me to actually turn bearish, I need to see much lower prices from here.
Interesting.
But if we drop below the 118.50 area, I'm gonna be on the short-term neutral once again. You know what I mean?
Got it.
Until then, I remain bullish. So having to do with cable, the situation is more or less the same. I mean, it's the same in what sense? As in the euro, people that really want to be bearish are seeing the potential of a double top. And of course, there is always the possibility that this will prove to be a double top, but in my opinion, it's a rather low one. Also in the cable, if somebody wants to be bearish, you have one technical reason to do so, and it's this. Let me draw again. It's this blue ascending channel. Okay, it has been overthrown once here, but other than that, this is a channel that has proven quite important to the market. Just look at it. It's been respected there as resistance, there, here once again, twice as support here and here. Okay, so somebody can be saying, yeah, like, okay, fine. I mean, why not? This might be, you know, a reversal, and we might be headed lower. And let me be quite clear. I do believe, and I do see a likely scenario that, you know, this is just a complex correction to a strong move lower. I mean, this is a high probability. But now this is a long-term view, and in long-term view, you say this is a very strong bearish move. It started in 2014 when the cable was trading, because some people might not even remember, above 170. Okay, and we found ourselves trading below 120 or at 120, whatever it was. Yeah, momentarily it was below 120 actually. And in such a strong move lower, you can obviously have prolonged corrections before resuming the main trend. So from a long-term perspective, the cable obviously remains bearish. Why? This move higher has definitely not been impulsive. It's a slow, grinding, overlapping process, right? And it has no impulsive characteristics whatsoever. But shifting now lower to a lower time frame, I have no reason to believe that this is not going to be just another. Either it's going to be a triangle and find support right here, right now, or might be a bull flag and find support a little bit lower, like somewhere there. Okay. So in the short to medium term, I have no indication that, you know, we just found a high. And you know something else? I would really want to see a move higher towards the 61.8, not only because the 61.8 of the last move, this last move is what transpired after we got the Brexit vote. So not only because that would be a very nice and interesting level, but if you see, if we project this 61.8 line, it perfectly comes right here at the 2016 low, the pre-Brexit low. Okay. So this is quite a nice area.
Yeah, nice. Yeah.
This is quite a nice area, and also because, as you know, the market very often wants to inflict the maximum pain to the maximum amount of participants. I more or less bet that a move above this high is also going to get a lot of people trapped being long, you know, just a couple of hundred pips, perhaps before we can see a true reversal and continuation to the downside, right?
Do you have any view of euro pound, since they're both in kind of similar situations? Could that give you a clue at all? Like Aussie Kiwi gives you a clue of, you know, preferred shorts or longs?
Listen, I have two views in the euro pound. View number one, it's the daily one, which tells me don't waste your time. Find something better to do with your life. You know what I mean? That's what the daily chart tells me. Now, the weekly chart, though, tells me that it's quite likely that there's another move lower.
All right.
Okay.
Interesting. Thank you.
Oh, my pleasure. Okay, so I think more or less I covered, the things I had in mind. Having to do with crude, and then we can go through questions because I'm sure we have quite a lot I haven't checked yet.
We're almost there.
Now,
we're almost there, Steve. 60. Well, that's 6280 or so left. Yeah.
The area I was looking for, for a reversal is the area between 62.20 and 63.30. I'm also monitoring this ascending channel here, but I have to reiterate once again. I think we are much closer to a short term. I repeat here, a short term top than anything else. Okay, so buying up here, in my opinion, makes zero sense. I would love to be buying after kind of a strong correction lower. Okay, but the time to be buying this, is now.
We're getting a shooting star candle on the daily today.
So far, yes, but you know me, I really don't want to give too much weight on daily candles until they've actually
hasn't even closed.
Yeah, let's see how it closes, because something, it can become even worse than that. Currently it's almost becoming a gravestone doji, but let's say that we move lower and we close especially let's say we close below 61.5, then it's a very nice key reversal, and then it's like an excellent candlestick signal. It's like one of the best reversal candles you can be watching for. And then I'm going to be monitoring this ascending trend line, and once we break below that, I'm going to be interested. You know what I mean? But we are a couple of little steps away from that, and so until that transpires, this is just something. This is just a theoretical scenario, and although I love theoretical scenarios because that's how you build a thesis and how you build expectations and how you plan trades, many of which never fit the criteria in the end, but some of them do. You always need to be able to recognize that from theory to practice, there is some distance. There's one more thing I want to show about the indexes. Nothing has changed in what we showed yesterday. I mean, even though the SPX moved a little bit higher from there, we're still riding this channel resistance, and I do believe that we should see some short-term correction before moving higher. I also want to show that the DAX is now also hitting resistance, this megaphone formation resistance. It's also overbought in the very short term. I mean, we moved within 5-6 trading days, we've moved 700 points. Like, that's roughly what, 5%, which is more than a decent move. So be a little bit careful from here. We might get some pullback from here as well. On the other hand, if we want to talk about bullish scenarios, Spanish stocks, the IBEX, is currently testing horizontal resistance once again, as at the same time it's peaking above this descending channel. So this is an index that perhaps, has some upside left to it, because if we zoom out, you're going to see that this is more or less a pretty good looking pole and flag, right? We've talked about it before, but we got rejected, and we're there once again. And perhaps this time, the scenario will play out. And it doesn't have to be a long-term bullish scenario, because if you zoom out, you're going to see that this is a large triangle. But why not pushing towards 11,600 once again to test this triangle, right? So there is room to the upside here. So that with that, I'll go through some questions because I'm pretty sure we're going to have a lot of them. Let me open the question box. There we go. S&P going higher. Yep. Briefly outline the correlations between the S&P and the yen pairs. Sorry if you did this earlier. That was for Blake. Yeah, Blake showed this actually some days ago. I'm going to tell him so he can mention it tomorrow once again. Pound yen, Aussie yen, pound yen. Okay, sure. Pound yen. Let's go. Double top on the Russell. Okay, let me go through the Russell because we're just talking about the indices, and then I'm going to go to pound yen. Okay, now the Russell. Listen, once again, a lot of people are trying to top pick the Russell because it's underperforming, and yes, I agree it's underperforming, but first of all, we have this ascending trend line. We haven't broken below it. We've actually kept respecting it. We're also testing this ceiling, let's call it once again, as it happened in this case when it was lower at 150.65. We finally broke above it. There's a very high chance, I mean, the probabilities are that we're going to do the same here as well. So yes, the Russell is underperforming, but so far we have no real indication that it's reversing, right? It has kept consistently posting higher lows and higher highs. So in my opinion, you know, don't jump the gun. Obviously, the reward to risk ratio is excellent here for you to be short with a very, very tight stop loss, let's say above that high at 155, let's call it 50, 155.50. But, you know, the chances, you know, you need to know that the chances are quite low. I also noticed the RSI divergence. You've seen that I drew it here. I'm just saying, don't get over enthusiastic about any of those positions. So, you know, in these kind of reversals in strong markets like this, be willing to risk money that you consider lost in advance, and you have nothing to worry about because you know, you might catch, you know, a nice dip below there, and if we actually break below that, we can easily come down to 150.50 and retest this zone at the very least. So ending up making this a range. Okay, that's what I say about the Russell. Now let's have a look at the pound yen. And the pound yen, I actually wonder why Blake didn't mention it. He probably forgot about it because I know that he has been very, very closely monitoring it. He showed it yesterday, as a matter of fact, because he was monitoring this as a potential wedge, and we're currently testing the support. So the pound yen posted as the euro yen did an evening star formation. This is a very powerful. Is posting now as the euro yen did. An evening star formation, candlestick formation, which is a very powerful reversal formation. And although it's early in the day, I find it kind of hard that this candle is going to retrace so much that, you know, it's actually not going to prove to be, you know, an evening star formation. So the probability that this is going to end up being an evening star formation is already quite high. And this is a warning signal, especially since we broke to new highs.
Yeah, it looks like a 3-driver with a stop hunt a few days ago, no follow through.
Yeah, so if that proves to be the case, there is a decent amount of downside here without even invalidating a longer term view that's bullish, right?
Great.
Because don't forget that these blue triangles break to the upside that has been respected is also what I would define as my bull bear line. So until then, no matter what happens, I cannot turn like bearish to the medium to long term, just for the short term. Okay, so that's what I see with having to do with the pound yen. Aussie yen, I did cover probably your question. Abdul, tell me something. Was your question before I covered Aussie yen? Nick asks about the bond. I'm gonna wait for Abdul to give us an answer, and I will be actually checking not only the bond. Thank you for reminding me, but both the treasuries and the bond. Okay, So let's have a look at both of them. Okay, first of all, there are two interpretations about what the Bund has been doing here. The diamond interpretation, in which case we've already seen a break to the downside, and the megaphone pattern formation, in which case we have not seen a break lower. So these are the two interpretations. Okay. Personally, the fact that we broke below this megaphone, we came back to retest it, etc., tilts me a little bit to being bearish. But I want to put that in context, as much bearish as you can be for something that is in such a well-defined range, because you see we have like a very solid, massive area of support at 159. And we also have this well-defined descending trend line acting as resistance. So as long as we are within that area, I cannot be in the long-term bullish or bearish anything here. But in the short term, I'm more inclined to be looking for more weakness. Okay, so that's all I have to say about the Bund. Now, having to do with the treasuries, nothing has changed here. I've said it many, many times. I do recognize that the price action lower has been grindy, but I see nothing bullish having to do with the treasuries. I mean, we had this well-defined correction within the blue ascending triangle. We broke below it. We formed another bearish consolidation pattern. We broke below it. We retested it. We're grinding lower towards multi-year lows. Obviously, full confirmation if we break below them, but my gut feeling tells me that we are still headed lower, no matter how slowly or whatever, we are headed lower. I need to see evidence of the opposite for me to change my mind. Until then, I'm inclined to be looking lower. NOK and SEK, yes, with pleasure. Let's have a look at them. I'm still short only 1/3 of my initial position with USD NOK, and although I said yesterday I recognize the potential of a very good bounce from there because it's a very interesting zone, I'm going to keep my 1/3. It's anyhow from 8.29, so I'm very, very comfortably in the money in that as well. I'm going to keep it until I see if we make it back to the 8.21 area, what happens from there. I'm going to probably be adding there. 8.21, a very important area. It was resistance there, support here. And both the 50 and 200 DMA can be found there as well. It was also the 50% fib, previously. I mean, and if I draw a fib from there now that we have some short-term low, let's see if it's also a fib. Yeah, and the 50% fib is also, roughly there, a little bit higher, 8.22. So as you see, let me draw it. Very interesting area here, right? Very interesting area. Unless we break above there, I have no reason to change my mind about USD NOK being bearish. Okay. Now, having to do with USD SEK, same deal here. We broke below there. We almost came down to the zone I was looking. We are rebounding. Let's draw some fibs from here and see what we get. $8.27 also coincides, the 38.2 also coincides more or less with that low. That's the first area of resistance you should be looking for. Afterwards, you have the 8.32, 8.37. I would say that roughly, as long as we remain below the 61.8, I would also not expect the move lower to be over. Okay. Okay, let's see what other questions we have that I haven't already covered because I went on and covered quite a lot of stuff. Aussie, by the way, is testing the lows of the day once again. Listen, in the Aussie, ultimately, I would really want to see the 0.7740 level. And let's have a look at the Kiwi because we didn't have a look at the Kiwi and the Canadian. Kiwi obviously remains quite a lot stronger. But honestly, it's very overbought in the short term, and it might need to do some catching up. Also, currently testing this descending channel resistance. So, you know, I don't think this is the place for you to be long. Rather, a high probability that we're going to see some retracement there as well. Now, let's also have a look at the CAD. Okay, the CAD is trying to rebound from roughly the 61.8, but so far the rebound has been extremely unimpressive. Just to give you an idea, so far today, and I know that it's early in the day, we have an inside day to an inside day. So this is a very tight consolidation, and usually consolidations after a strong move to any direction, in this case obviously it was to the downside, tend to break in the direction of the previous trend. Okay,
I think they call those double inside days.
Yeah, and double inside days are actually tradable in the following manner. The tactic about them is in double inside days. Actually, let me take the pen here to double inside days. Let's assume that today we have an inside day as well. Theory says that you buy or sell the move higher or lower from the first day, this day, okay?
Yeah.
For a continuation to whichever direction that breaks. That's what theory says about them.
Okay. I didn't know that.
Yeah, this theory also has a name. There is a specific person that, but unfortunately, I don't remember his name to give him credit. But you know, this is a theory about double inside days. Okay.
There's nothing new under the sun.
Yeah, that's always true. That's always true. Even in the age of the internet, you know, you always have things to learn, right?
Yeah.
Dale, I don't want to eat through your interview's time. If your guest is here, I think we covered quite a lot of instruments today.
A lot.
Yeah. So.
Yeah, and now there's going to be even more coverage because this is about crypto mainly. So I think that's the only thing we didn't cover today. So Sonny at BTC is going to do it for us. And
yeah, and you know something, although I have an opinion about both of them, especially lately they've been trading, you know, in quite a clear manner. I heard since the beginning in your introduction that you mentioned he's going to talk about them, so I thought it was a good opportunity to let him do it because let's be honest, I mean, I'm monitoring them from a technical perspective, but I don't have and I don't intend to have any positions in cryptocurrencies, at least not quite, you know, in the near future.
Okay,
by the way,
well, I don't think that's going to shut down the market, but
I'm absolutely sure.
You know,
by the way, I just want to.
The headline that crypto is failing because Steve Volge's not planning to trade them.
No, there is no question about it.
All right. All right.
Never said that. Before we go, just 1 second, I just want to share the new browser version of our site with our friends here and you know, people that might be interested. This is going to be the new view of ForexAnalytix once the new design gets implemented. Might take like a month or two because, you know, we're making some other technical changes, but I really hope everybody's going to enjoy this because, you know, ForexAnalytix, the browser application is going to become a single page, but it's also going to give the ability to people. Every window is going to be modal. You will be able to minimize, maximize, or whatever, and even utilize multi-monitor setup in case you have one. Okay.
Wow. Always on the cutting edge.
We're at least we're trying to.
Yeah.
So thank you very much, Dale. Enjoy your interview.
Okay, Sonny.
See you all tomorrow.
Sonny, I'm going to make you the presenter, so you'll have the controls. Looking forward to hearing your voice and seeing your screen. Here you go. Here's a baton, buddy. Welcome to Face.
Can you hear me?
I can hear you, Sonny. Welcome.
Excellent. Thank you. Thank you, Dale. It's an honor to be here. Thanks for the invitation.
Oh, you know, what a great time to be talking about something that's a headline story. I have to ask everyone about it when I interview people because it's such a phenomenon. So I think you're my first pure crypto interview that I've done in a while. So I'm looking forward to seeing your screen, Sonny. There's a screen share function there where you'll be able to show your charts.
Okay, you'll have to tell me if you can see the charts now.
Got it. And maybe your volume could be a little higher or talk a little louder.
Okay, just bear with me a second. I'll just adjust
That's better.
The recording volume. Hopefully it doesn't distort too badly now, but
no, it's good. It's good now.
Okay.
So this is where I want to start. And you know, I've been to your TradingView page, and I will acknowledge that I saw some technical work that had you turning negative in the upper 17 range in Bitcoin, and you know, you never wavered. But what I'm interested in, Sonny, is how did you get involved? Tell us a little bit about the journey of how you got involved in the trading business, and if you had mentors or what influenced you. I see you're a cable stick guy and an Andrews pitchfork guy, but my bet is that when you began and what you see now were two different things. You there, buddy? Can't hear you, Sonny. Let's see. Your mic is good.
He's unmuted, but probably by adjusting, he did something. Perhaps if you want to change, if you want to have a look, if you change your microphone selection in the platform in the GoToMeeting platform.
He's saying it crashed. And the question, I don't know what crashed. He's offline. Can we switch?
Yeah. Okay. He says he's here.
All right. Let me try and make him the presenter again.
Okay. I found him, Dale. Sunny BTC, I think.
Yeah, panelist offline. I'm going to make him the presenter.
I made him.
You did? Okay.
Can you hear me?
Yes, we can. Okay, he's back.
Sorry about that. I have no idea what happened. It just suddenly crashed on me. But anyway, well, you mentioned.
You remember my question?
I remember you mentioning something about my TradingView charts, and then it crashed.
Oh, okay, yeah. I mentioned, you know, your bearish stance on Bitcoin from your TradingView page, but I was talking about, I could see that you use Andrews pitchfork and use sticks, and what I'm interested in is what it was like for you at the beginning, how you got involved in trading. So I know that the setup I'm looking at now was real different when you started. Can you tell us a little bit about your beginnings, Sonny, in the industry?
Yeah, sure you can. Well, my trading career began in 2007 when I left a job in London. I was working in the IT industry. I was working for a bank, and I was you know, had some savings from there, and I actually moved to Birmingham because I got married. So moved to Birmingham and was out of work for a bit, so decided to try trading. Started looking at MACDs, stochastics, and all of the usual sort of retail junk that gets thrown at you by all of the brokers, and soon lost my shirt pretty, you know, within the space of about a year and a half, and realized that my psychology needed working on and all kinds of other stuff. So anyway, called it a day, didn't look back at trading for another 7 years. In 2000, 2013, after having moved to Birmingham, I'd worked through about 5 different jobs and just got a consistent string of redundancies based on outsourcing. And I don't know if anyone's worked in the IT industry, but it's just gone through a really massive change. So anyway, came to the end of my tether and decided to go back to trading and see if I could work it out. So 2013 also happened to coincide with the first time I came across Bitcoin. It was about, I think it was about $15 at the time, about $15, and I decided to invest in it. So I bought a bunch of Bitcoin and soon started to try and trade that as well, which was probably a bit of a mistake. I lost a few Bitcoins along the way doing that over the next year and a half, but overall I was doing okay. So yeah, that takes us up to about 2014, 2015. So what I started off learning with Bitcoin was I got introduced to a guy called Inner Circle Trader, Michael Huddleston, which I think he's spoken to Saeed about. And he kind of teaches a very different approach to what retail traders are used to. The horizontal support and resistance thing is what he teaches, along with order blocks and breakers and all different things and different ways of looking at market. Helps you to put a storyline around what's going on. So I learned about that. It did help a lot with my trading in terms of bias, but I was still finding that I was struggling along the way. So I kind of I decided to look into other avenues. So the whole time, well, I'll take another step back actually, because so I traded Bitcoin up until 2015. In 2015, I was still unemployed, and Bitcoin was about $250, $300, and I was at the stage where it had just been going sideways and it was untradeable for me. So I decided to liquidate and convert it into fiat, which is probably the best thing I could ever have done at the time, in order to pay bills, in order to trade foreign exchange, which had a much more volatile market at the time.
Okay.
And so I did that. Ever since 2015, I've been in fiat until very, very recently. So I traded foreign exchange for the last 2 years, successfully. I've been doing okay. And recently,
were you also driving in fiat?
Sorry, driving in fiat? Driving
a Fiat.
I wish I was driving a Fiat. I haven't been driving a car for the last 2 years. Yeah, those old bangers are not worth my time of day. I'm only looking at Lambos these days. So.
Yeah, probably a Lamborghini, but anyway.
Just kidding.
It's a great story, and so you went to FX. How did FX go for you? They're very good technical markets. Did you have success there?
I did have success there, and what I found was that just because of my nature, I'm a very I'm a perfectionist, and I try and find the tightest entries and the tightest stops and stuff like that. And what I ended up doing was I veered away from ICT and I started looking at other ways of getting confirmations and that kind of thing, so that I could reduce the risk and increase the reward kind of thing. And which led me to volume and stuff. So I was I was successful within that, but I was always looking to push the envelope a little bit further. And as a result, I could have done a lot better if I wasn't so greedy. And I think that's one of the takeaways from that entire period. But
there's a lesson. Did greedy equal more leverage, or not booking partial profits?
A bit of both. I'd say that the stop loss was too tight normally. I'd be trading off the sort of lower time frames, and I would say that that I wasn't taking profit. I was expecting targets to be reached, and they often missed. And so it's kind of like scraping by.
We've all been there.
Yeah. So kind of like scraping by, and then around about 2016, I think something just hit through, and I started. I was like I wasn't doing great up until 2016, and then from 2016 to 2017, my account started to actually bottom and started to grow, and so ever since then, things have been on the up, which has been great. But my the desire to improve and to reduce risk and increase reward has always been there, and I've strived to improve that. And there are many things that I'm.
Sonny, that kind of fits a profile. I'm closing in on almost 1,000 interviews, but from what I just heard from you, you started getting back into trading after leaving it alone for 7 years in 2013, and you started to make your breakthroughs in 16, 17. And, that's what I hear from a lot of people, that it takes them about 3-4 years. There are always exceptions. Some people, it never happens for them. Some people could do it sooner, but it sounds like it was about a 3-4 year period before you started making breakthroughs to becoming consistently profitable, with drawdowns, of course, but having the confidence to know you can make a living off the market.
That's right. True? And getting family on side as well. That's a big thing as well. Once you've got them on side, then you're okay. So yeah, the confidence started to come through, and yeah, I'd say about 10,000 hours is what I've heard. It's kind of like the de facto for mastering anything, but I don't think you'll ever master Forex. But
okay. So thanks for sharing your journey. Let's I see we're looking at Bitstamp here. So why don't we talk about what you see happening here? And one of the questions, before I forget, and since you were right about the decline in Bitcoin, do you think that what's going to happen here, or it's already happening, is similar to what happens in the stock market, is that one area gets hot, and then once it doesn't, there's rotation, not out of stocks, but maybe into different sectors. And in the case of crypto, even if Bitcoin's under pressure, that there are going to be other cryptos that actually benefit from this transition of Bitcoin going through a correction and rotating to them.
Absolutely, absolutely. It's one of the things that I wanted to highlight today, actually, was the, Bitcoin was the first cryptocurrency, right? And then you had a bunch of other altcoins like Litecoin, Namecoin, and Peercoin, and there's one came after, which was Ethereum. And Ethereum's kind of been like the second incarnation of Bitcoin, which is built on Bitcoin's fundamental system of the ledger, and it's also added onto it this concept of smart contracts, which is a way to build applications, and so there's a bit of intelligence built into Ethereum, which was missing in Bitcoin. So Ethereum was kind of trailing Bitcoin this whole time, and so Bitcoin was always going to top first because it's reached a technological critical mass, and it's bulletproof. It's got its pros, which is it's very secure, but ultimately it takes too long to send Bitcoin and receive Bitcoin, and
transaction speed was the issue, and that's what some of the other ones are trying to improve upon. Is Litecoin one that has faster transaction speed, or is it Ethereum that got that pitch?
I think it's Litecoin that's faster, but Litecoin's got similar scaling issues as far as I'm aware. I'm not very well versed in Litecoin, but the problem with Ethereum, again, so Ethereum's like blockchain version 2. The problem with Ethereum is, again, that it's a scaling thing. You can only put so many applications onto it before it starts to slow down. And there was an application built for it called CryptoKitties, which has completely wrecked it, apparently. It's slowed it right down. So it's just like a silly app that you can mess around with, and it's kind of slowed the entire network down, which is why the Ethereum developers are starting to look at increasing the speed of the networks using new technologies. I think it's called Plasma. And Bitcoin's also doing the same thing with the Lightning Network. And so these sort of things are pushing the the longevity of these coins out into the future a little bit further. But we haven't actually seen anything as customers yet.
Sonny, most people are focused on price movements of these cryptocurrencies.
Yeah.
I'm kind of interested, since you've been involved with them and trading them, what you feel is some of the safer exchanges, how trading is as far as spreads and activity. But you know what, you can make a fortune in the market, but if you don't have security of funds, what's the difference if one day one of these exchanges, you know, won't send your money out? And I think there have been a few examples of that. So where do you trade when you trade crypto? And even though you're trading it, do you keep your balances light for that reason because they're unregulated?
I do keep the balances on the exchanges light, and also it's always been difficult to judge which exchanges are going to be the safer ones and which are going to be the less safe ones. I mean, I tend to judge an exchange by what their customer service is like. Are they responsive? Can I get my Bitcoins out quickly? Do I have to jump through hoops and stuff like that? You know, have they got any regulations in place?
Were there any problems after yesterday's big decline for people asking for redemptions and getting money from any of the exchanges that you're aware of? Because, you know, when everything's going up, whether they're booking the trades or not, there's an old, you know, enemy of the investor in so many different asset classes in history called bucket shops, where, you know, they say you bought it, but they never really bought it for you because they know eventually it's going to go down, and they just never did the trade. So how did the exchanges handle redemptions after yesterday's fall, or over the last couple of months when it became more of a two-way street than a one-way street? Do you know?
I'm not aware of any issues that came about yesterday, Dale, but
okay.
what
Cool.
I mean, there might have been some issues. There weren't any issues with the exchange that I use, which is Binance.
Okay.
But what's happened recently is, I don't know if you've noticed in the news, but everyone's talking about Bitcoin, right? So every man and their dog is trying to trade Bitcoin because it's going to the moon. So Binance was just overrun with applications, and they've only yesterday, I think, they started opening up the service again, just for a small time window every day for like an hour or so. They're going to start allowing customer registrations back on.
Yeah, someone in our communities, you know, disagreeing with my whole assertion that that's not correct, that these exchanges are regulated, and David Cooper is saying that a lot of them have a lot of regulation.
Yeah.
So I don't know who the regulating bodies are, but I know on the futures contract, I know it's, you know, the CFTC, SEC, but maybe I'm wrong. Maybe it's you don't have to worry about your funds. You know, I just had the experience that there were brokerage firms that failed in the futures industry, but if they were members of a regulated exchange, the exchange always backed them up and made customers whole. So, you know, I was brought up in that era where it was possible to be with the wrong firm and not have access to your capital. So enough of that buyer beware stuff. Why don't we move on to some outlooks and price projections and what you're thinking here in 2018, Sonny?
Sure. Okay. So I mean, you can see the screen at the moment, right?
Yeah. Got the pitchfork?
Yeah, got my pitchfork at the ready. And so this is Bitstamp. This is one of the longest historical charts that I can find, basically. And I think what I found is with a lot of trader guys, they don't always look at the historical data as like this, for example. So this is something that I spotted a couple of weeks ago, where this is the Bitstamp has hit the top of the channel here. And if you look at the tests, this is the quarter line here. There's been 2 tests on the quarter line. It's been a little bit rough around here, but it came up and touched the median perfectly there. And then here, it came above it. The bodies are supported by it, which is key. I don't look at the wick so much. And it comes up, touches the next 1/8, comes up, takes out this quarter, and now it's finding support just here. So it popped just above. So to me, this is a valid channel now. It hasn't had, the only issue that I've got is it hasn't had a bottom touch here. But because of this upper body candle touch there and these lower body here, that to me is a valid median there.
So explain to me that, you know, this will be interesting because I know you have other lines that aren't part of the conventional pitchfork. But, you know, with wedges and so forth, you have things called throwovers. Where's your next line if we break through this top blue line of the pitchfork, what does that imply? And have you seen that both on the top and the bottom of the pitchfork where you get throwovers or throw unders? How do you handle that? And what does it tell you?
It's interesting because there was actually a throwover, what people were classing as a throwover, because a lot of people were drawing,
I see.
if I can remember, a lot of people were drawing this channel.
I see what you're talking about, that you already had a pitchfork, yeah, before the bigger one.
Yeah, something like this. I think it was just here.
Right.
So a lot of people were drawing this pitchfork here.
I like that.
And this happened. Boom,
Yeah.
just took out the top there. And everyone was like, oh shit, you know, he's going to, sorry, excuse my language, he's going to the moon and stuff, right? But
Yeah.
they're ignoring the monthly channel that I've got here. So anyway, so it's come out. It looked like a breakout because it has had an exponential move there now.
Right.
And you know, this to me is potentially a blow off top, right? So anyway, so I'll take this off, right, and we'll drill down a little bit because I've got another couple of channels that I'm looking at. So that, yeah, this is the channel that was originally this is the valid channel that I'm looking at now, which is a weekly channel.
Nice.
And again, that coincides with the top here on the monthly. The blue line and the purple line intersect there. So
And
we're being
potential
supported.
failing rally here.
Yeah, exactly. Potential failing rally. There is a breakdown here, and this median's getting slapped about, right? So next level, we drop down to the 3 hour. You can see.
Why 3? I'm curious.
It's kind of just my favorite go-to number. I've done some back testing with order blocks and stuff that ICT teaches, and I've found that the 3 hour, for some reason, just seems to provide much more clarity. But it's just personal.
It's interesting because, you know, I'm known for teaching people 3 drive formations, and I'm a big believer in the number 3 being a number of completion. So that's it. But I've never looked at the 3 hour chart. So that's pretty cool. Yeah, go ahead, buddy.
If you
Great
think about
interview.
it,
Yeah.
well, if you think about it, you can divide the day up into what, 8 times 3 is 24, right? So it's another mathematical way to look at the market. I think it's just I don't know. And you get the London session, which is from sort of 6 till 9, and then from 9 till 12 is dead, and then from 12 till 3 you've got your New York session. I don't think the 3 hour actually coincides like that, actually, though. But anyway, we're getting off topic. So this is the 3 hour channel. It's okay. It doesn't take much to distract me, trust me.
Yeah.
So the 3 hour fork we've got here it's touched the top then. We've got a test there. I like the way that these candles here are respecting the median again.
Yeah.
Right? So there's respect there. There's bodies being held. So to me, we're just about to sell off, and everyone's buy the dip, buy the dip, buy the dip, buy the dip. What till here? And
Right.
that just happens to coincide with this lovely support that we've got on the bottom.
So you have confluence with the pitchfork and the channel line.
Yeah, and we've got the median of the monthly, the low of the weekly, and the bottom of the 3 hour, and that's at about $10,000 to $9,000. There's a little confluence there, so I think we're heading there. I wish I'd really kept my short, but yeah, I think we're headed there. So
Nice look.
That's a stop.
That's a nice look.
So anyway, I don't know if for me personally, I don't want to talk. I don't know how long we've got. I can go on forever, you see. So do we have? How much time do we have? And I can.
How much time do you want?
Okay, let's. Shall I just carry on as if we've got infinite time then?
Yeah, go ahead.
Okay, so so my outlook is right. The bottom of this channel needs to hold here. So the purple line there. I'm not 100% sure if that is going to hold, because if we are at the top of the monthly, that should break because we've just recoiled off of there. If you look at the volume here, there was actually. If I switch to the daily.
Oh, huge record volume.
Yeah, that was a large chunk of volume, but what kind of makes it uncertain for me is that the candle that all that volume transacted on was this candle here, this big candle that was very wicky. Can you see that?
People were buying the dip.
Yeah, could be buying the dip, exactly. But the thing is, it closed red, so it did close down, but it's above 50%.
But it's still a red volume bar, which is different from the green volume bar you had at the bottom down there.
Yeah, exactly. And so the way I'm seeing this at the moment is I think the market's in a bit of a congestion. I can give you another way to view this as well. I'm just trying to think what the best. Can I switch to the dollar chart? Because
sure, go ahead. But that's our bailiwick. Go ahead.
Yeah, because I've been thinking about this. I had this idea of late, which was that Bitcoin has, traditionally just completely ignored the dollar, and whether the dollar's going up or down, it doesn't give a damn. Do you know what I mean? It just does its own thing, right? So I've done some studying on something that Wyckoff teaches. I don't know if you're familiar with this, but it's cumulative volume.
Interesting.
So hang on, let me just see. I'm on the 180. Let me switch to the daily first of all. Let me switch to the 1 week.
And this is what, the FXCM dollar index?
It is, yeah, it is. I mean, I've done back testing with futures data as well.
Okay.
And what I found is that the difference, if you're looking at anything above like a 5-minute chart, there isn't a lot of difference between the volumes that you get on a tick chart and versus just something that trades on CME, for example. But anyway, what I wanted to highlight here is this, right? So from 2014, June, up until that big rally, 2015, April, right? Look at the volume that's stacked up in that entire range. And that range made up, that was a 17% move there, right? So look at the volume that's stacked up here, there, right? And then compare it to what we got here. This is a 5 or 6% move, right? Compared to that. So there's not much difference here between that and that peak, right? Same thing happened here. Right now, Wyckoff would look at this and he'd say, right, well, that is called shortening of the thrust. And he would say that this is very bearish, right? And I would agree. I think that this is very bearish. Right? So breaking it down, it's come down, and we've had an equally big sell-off, right? But we haven't taken those lows yet.
No.
Right? And we've had this little bounce here. It's come back down, right? And so for me, for another zigzag to form, right? This is a 3% move from there to there, right? So for we just missed it there, by the way, just missed it by a hair, right? So at that peak there. So for me, if this guy reaches up there, then that is potentially a sign of strength, and that we could not take out the highs maybe, but I think that we could go a lot higher, up to maybe here, up to here possibly, to sort of make a head and shoulders there.
Okay.
And then roll over and really sell off hard, possibly, right? But to break this down a little bit further, so we've had that big sell-off, the shortening of the thrust has happened here. Sorry, this is not shortening of the thrust, this is absorption. If it gets to there, this is absorption. So I'll take it to the 3-hour now. All right, so on the 3-hour, you can see that that was the leg down there. And what you tend to find is that as you make new lows, if that new low is formed on less volume, like that swing there compared to that swing there, you can see that the peaks are slight tiny bit shorter there. So then it reverses, because that just signifies that the sellers are running out.
Right.
Then you make this big nice move up there, comes up, takes out the high here, but on less volume. So it rolls over. Now here there was a lot of selling, and then here there was another lot of selling. But if you look where we are, there's less selling compared to the previous swing. And if we get to this guy here, can't remember what that is now, but that's a 0.5% move there. If we get to there, then that will create a new zigzag again, and that will be confirmation. So that price level is just say 11,900, right? So if we get to 11,900, that'll create a new swing, and that would be bullish in my eyes, and we'll probably come up and test the upper region of here. And if not, based on the daily chart that I showed you earlier, we'll head up a bit higher. But the reason I'm bringing the dollar into the whole crypto discussion is because if Bitcoin has topped and the dollar has bottomed, you know, for now, short term,
right,
then
that's going to put more pressure on crypto.
Yeah, well, it will put more pressure on Bitcoin versus USD, or Ethereum versus USD. Right. So anyway, so that's the dollar thing I wanted to show you. Now I can show you.
That was very interesting. So, you know, basically there could be a dollar rally before a bigger break, and that's the thesis you're running on. And you think that this time Bitcoin and other U.S. Dollar denominated against crypto, a strong dollar is going to have impact on price. That's what you're saying.
I think so.
And ignoring it, but you think now that it's heading down, they could use that as an excuse to pressure it more, right?
Exactly. You know, you never know, you know, what Trump effect is going to happen next. So, so this here, what I wanted to show you was the Ethereum chart that I've got, right? So.
Wow.
So if you look at the historical Ethereum chart, this is where it gets really interesting, right? Because so this is Ethereum versus Bitcoin, and this bottom here kind of confluences with the high in Bitcoin, and ever since then we've just
so there's a rotation. Right? So the rotation was out of Bitcoin into Ethereum.
Yeah. And the interesting bit is that the rallies in most of the cryptocurrencies that are not BTC kind of started around the December period as well. You know, everything's just, you know, gone hell for leather at the moment. And so I think that, you know, Ethereum being like the second biggest market share, it has a massive influence.
It could absorb the volume better than that, so that's where the bigger players would go if they wanted to diversify out. What a great interview, Sonny.
Thank you, Dale. I mean,
you want to wrap it with anything? You know, I encourage people to follow you. I know you have a Trading View page. Do you have anything else where people could keep in touch with what you're doing besides following you on Twitter at SonnyBTC?
I don't actually have anything else, to be honest. I haven't been updating TradingView very much, to be honest with you, but I will try and keep that page updated, because it's definitely worth putting.
Yeah, you're a great resource for guys like me trying to wrap my head around what's happening here, and you know, I might have some ideas, and then I look at your stuff and I'm seeing it, some of the things I was thinking manifest. So a great presentation. I'm so glad I reached out to you on Twitter and that you took time out of your day to edify us.
No worries. It's been a pleasure, mate.
All right. Well, yeah, like it or not, you're my trading warrior brother now, Sonny, at BTC.
Thank you.
I hope that 2018 is a great year for you in every way.
Bless you, Dale.
Thank you so much, buddy. Everyone, thanks Sonny. And Sonny, this is being recorded. I'll put it out and drop it in your inbox on Twitter, and I'll be tweeting this out. Thank you so much for bringing your knowledge, which was hard fought over many years, without an axe to grind. So you have a giving spirit. I appreciate it.
Thank you, Dale. And I want to thank you for being like so open and giving to the community. You do a lot of stuff which is just, you know, it goes against a lot of what people think is what is true about Forex and trading and stuff. And you've got a very good spirit, and I like you. I'll always follow you, mate. And you're my trading warrior brother too.
All right, buddy. Have a good hunting, Sonny, and let's do this again. Maybe 2-3 months down the line, see what's happening out there in crypto. You're my go-to crypto guy now. All right.
Oh, thanks, man. All right.
So that's it, Fates. Turnaround Tuesday. Hope you had a great day. Hope you learned something from Sonny. I did. And remember, don't just count your pips, count your blessings, because you're all eagles. And everyone here, if they put their mind to it, can eventually soar above the clouds and above the crowds. So also take advantage of the promo. See everyone for Wednesday's action. Thank you, Blake. Thank you, Steve. Thank you, Sonny. Thank you, Face Eagles. Adios.